Hey, I'm Zach Stein, one of the founders of Carbon Collective, and we get a lot of questions from people who want to divest from oil stocks. This makes sense for a lot of us. It's a big theory of what we do at Carbon Collective, and especially for those who are holding things in retirement accounts for the next 10, 20, 30 years. So the question for many of you is not if you should divest from oil stocks, it's when you should divest from oil stocks. And right now, as of March 21st, 2022, we are potentially in a uniquely good window to divest from oil stocks and reinvest that money into climate change solution stocks like green energy and electric cars. So there's a lot of data here. Let's dig into it. Okay, so pretty basics. One of the most basic maxims in investing is to buy low and sell high. If you buy something when it's low, say at $50 a share, and then sell it when it's high, say at $150 a share, you will have made $100. This is the state that we're in right now, where fossil fuels are in a position of being high. If we go back and look over the past 25 years, so this is Morningstar's energy index, so this is US-based oil company and fossil fuel company stocks, what we can see is right now, in terms of price, it is at the second highest it's ever been. The last time was in 2014. What we can also see with this is that there's a lot of volatility when it comes to energy stocks. It can go up as quickly as it could go down. So this high that we're seeing right now, this very steep climb, we don't know when that's going to end. We don't know that how long that will last. All we can know is that it is at a high right now. And we can go and see why it's at a high because of the rise of oil prices. This is looking at the crude oil prices over the past 70 years. So from 1946 through March 18th, 2022. And this is a pretty cool site, Macro Trends. You can see all of it. It's interactive. And we can see the rise in oil prices, especially the sudden rise after the OPEC embargo in the 70s, and how that set off a cycle of real boom and busts in the oil industry. We see booms, where the times the oil prices have spiked, and then busts, where it's very quickly fallen. We saw this, the kind of most recent two busts we've seen were in 2014. This was kind of as the U.S. frackers and shale producers flooded the market and supply started outpacing global demand for oil, and then again in the COVID crash of what we saw. So the point in showing this is that fossil fuel stocks are highly correlated with the price of crude oil, and like the stocks themselves, the price of crude oil can vary significantly over this time. And so right now we are seeing oil prices be high. This is due to the war in Russia and due to fears around inflation. And the questions that we have right now is what's going to happen in the future. And we're getting mixed messages. When we look at groups like the IEA, who's a group that we really respect, they make it seem to believe that we are facing a major supply crisis, which would lead to the expectations of elevated oil prices and thus elevated stock prices. But the CEO of Chevron is saying that there's no shortage of oil as of March 7th. So we don't exactly know where we're at. What is going to happen in the future. All we do know is that oil stocks are high, oil prices are high, and things can change rapidly. So if you are, again, looking for that place to divest from fossil fuels, you're out of the past 25 years, you really would have only found one other time that would have been as good as right now to do from a price perspective. Okay, what about the reinvestment piece? A lot of people who come to Carbon Collective want to not just divest from fossil fuels, but then reinvest in the companies that are building solutions to climate change. This is the other side of that coin, and it is equally as good of a time to reinvest. So right here, what we are looking at is the data from, in green, the climate index. This is the collection of climate solution stocks that we create here at Carbon Collective. QClean, which is a collection of US-based renewable energy and electric vehicle stocks. And then iClean, which is a collection of international, it's a fund that is a collection of international renewable energy stocks. And what we've seen over this period from November 6th, chose this date very specifically because this was the date that Biden was elected, until March 18th, so last Friday, as today is the 21st. what we've seen is that these stocks were heavily correlated with the prospects for passing aggressive climate legislation in Washington. With Biden being elected, we saw these stocks rocket up in the months of aftermath. And with the talk of, the question was more, how big would the climate portion of Build Back Better be, and less, would Build Back Better happen? As it became clear that it was not going to happen immediately, those stocks came back down and were choppy throughout the year until, again, prospects for passing Build Back Better with an aggressive climate piece spiked again in October of 2021, but then without passage fell. And since then, what we've seen is largely the Wall Street pricing out the prospect of having that aggressive climate legislation, which would assist and improve the prospects for these climate solution stocks. That has changed since Putin and Russia launched the war in Ukraine. Since that point, which was on February 24th of 2022, the climate solution stocks, whether it be the climate index, whether it be QClean or iClean internationally, has significantly outperformed the overall S&P 500 during this time. And this speaks to potentially the next rise in bump that we could see in these companies' performance. We can see it here and coming right now already. And that is because countries in Europe and also in the U.S., we're seeing the rise of demand for EVs, and in Europe, the significant rise in demand for green and renewable energy in response to wanting independence from Russian oil is prompting these companies' prospects to look much higher. So overall, if you are looking to divest from fossil fuels and reinvest into renewable energy, right now could be a uniquely good window that won't last forever. What we know is that oil prices come back down, oil stocks come back down. And what we know is that right now renewable energy stocks and climate solution stocks very well could go back up and potentially very significantly as new climate legislation, especially that coming out of Europe, could come to pass that could accelerate the prospects of these companies. So with that, hope that you have found this useful. If you have any questions, hit us up. We're at carboncollective.co.